Yeah, that's all right. Good evening, everybody. Thank you very much for pitching up. Ismail here, who runs the collective trader group on Pelican, and I'm presuming that you've all got the app. Is that correct? If you've got the app, you go onto the Discover section. You can find the collective trader on the group's Discover, and it's well worth joining. It's free, and Ismail has very kindly put up some trades that he does, and also he's giving a series of talks. And the London Traders Club, this thing's about the third or fourth London Traders Club that we've had. And the idea is very much to introduce people to trading, let them know it's not scary, get them into Ismail's group so that they can ask questions to Ismail, because he's been very good at getting back to people, which is very kind.
Right.
Maybe a busy man throughout the day. And you can see the trades that he's doing, and you can ask him as he makes them why he's got that particular setup. Ismail's already done one talk, and I think there was a feeling from Ismail and ourselves that it might be a good thing to do a more structured course. So this is the first of 4 lectures or talks that Ismail's going to give, and these are going to go through candles. And Ismail was very clear in his previous talk that you really got to concentrate on the price and what the price is telling you in the form of candle charts. And the next 4 talks will just start off going through basic candle patterns. And today we're going to cover, or Ismail's going to cover, single candles, which will become clear with this particular presentation. The next one will begin to do formations of candles. So you get candle one day, followed by the candle the second day, and this, when you start to put them together, it starts to give you a good trade signal. The idea is that they won't just be theory. We will look at the theory, and then we will go and load a real life chart of a market that Ismail's been looking at, and then he can point out where he's seen these candles that we're having the setups, and he's seen them in the actual charts over the past week or so. So over to you, Ismail.
Alright, good evening everyone. Yeah, like Peter said, my name is Ismail. I run the collective traders group. We've done a talk about, I think about 2-3 weeks ago, and I kind of realised that a lot of people didn't really understand what candlesticks was. I don't know if everyone in there does put up trade view, so we'll just get the chart quickly. So yeah, basically candlesticks is the actual price action. So okay, we've got gold up here. Make it a bit bigger or smaller so we can see it.
Yep, let me go and try and do that. Is that the kind of thing?
Yeah. Can everyone see that finally?
Yeah.
Okay, so obviously each one of these individual candles by themselves, they don't really tell a story. So it's just you've got the alphabet A to Z. A by itself just says A, but if you add A with D, A with N, then add D to it, then it spells the word and. It's just the same thing with candlesticks. By themselves, they don't really tell much, but if you put a collective of them together, they can tell you a there and thereabout story of where price is looking to go. And obviously at the end of the day, with trading, you're never gonna get the holy grail to be able to beat the market. All you gotta do basically is find small bits of information from different areas. Some people may use different indicators, some people may use candlesticks, support and resistance, and you collect collectively an amount of information which will then give you a good high percentage of which direction price will go. And that's what we're going to do with candlesticks. At the end of the day, what we actually trade is price, not indicators or nothing else, it's price. So I believe that it's important for everyone to be able to understand what price is and how to reprice. So that's where we're going to start off with the one-day candlestick patterns. The one-day candlestick patterns are always advised to kind of wait for confirmation, but they can be very good warnings to, so you can get into trades early. So for example,
Would you want me to go and come back here?
yeah, we go to like the first slide.
Okay, so the first slide I had was just to take that as just what you just said, really.
Basically, yeah, in a nutshell.
In a nutshell, and then talk about the market here. But this was just the start from the very, very beginning about what a candle is.
Okay, so this is a candlestick, and these are the information which you can see from one candlestick. So for example, the top end of the wick tells you how high price has been throughout that day or throughout whatever period you're using. These candlesticks can go down to different time frames. So you can start off with monthly, then you go to weekly, then you go to daily, 4 hourly, hourly, 15 minutes, and it all represent the same information. But the higher the candlestick, I believe, is the more information you can gather. That's why I always tend to just trade with the daily. I work with the daily, and I find out all my information from the daily. But there's many traders, so if you're going to be maybe a day trader or maybe like a scalper, you would use lower time frames. So you would look at candles and maybe like the hourly, 15 minutes, 5 minutes, some down as low as the 2 minutes. So it depends on what sort of trader you are. But information goes across the board for every time frame, no matter what you're using. So the top end of it, which you'll see a lot of the time, is the wick, and this tells you how high price has been. The bottom end of the wick tells you how low price has been. So here now we've got the body. The body is where you find the quality information. So the body tells you, if you're looking at a bullish candle, the body will tell you the opening will be at the bottom here and the close will be at the top. So that will tell you throughout the day, it traded from the opening here, went as low as down here, risen as high as there, and ended up closing here. So this is all the information you can gather from just looking at one candlestick. And that's for a bullish one. And then on a bearish one, the opening will always be at the top and the closing will always be at the bottom, because obviously it's going downwards. So that's what you can tell from one candlestick. So that's what this first slide represents, the information you can get from the candlestick. Support and resistance areas, they're I always call them sort of like the range in which you're going to make your maneuver. So how you identify support and resistance will be the high of the previous trend, and it will be the low where price has stopped. So if we can get a chart, so maybe, I don't know.
Yeah. Which market would you like? I've got gold in there, but do you want to do one of your existing markets?
Yeah, gold, we can work with gold.
Okay.
What time frame is this one?
It's the daily.
Okay, can we make it just a bit more wider?
Yep. There we go. Like that kind of.
Yeah.
Is that better?
Yeah, that's all right.
Okay.
So if we're looking at from just this period here, we can see price rose to this area here and stopped. So it started here and it rose to this area here. So it looks like it found resistance here. It made an attempt back down and it came back or stopped around the same sort of area here. They always say to identify a resistance or to identify a support, price must approach that same area twice and fell, and it identifies the area as support or resistance. So for example here, price made an attempt here once, came back down, went back within the same sort of area. It doesn't always have to be perfect. A lot of people, even we're going to notice this with candlestick patterns as well, how it looks in the book or how they describe it in seminars or stuff, it's never picture perfect on the chart. So whatever you see, you kind of always got to use a bit of your own initiative to identify these areas. For example, here, it's approached here, but it came sort of near it, but not as high as it. But you can see this is the area where it's found support within this area here. And then, so that's how you identify a resistance area, and it will be the vice versa to identify a support area. So for example, let me see if we can identify support. Okay, we've got price, it came here, stopped, made an attempt back up, came back down to the same sort of area here, and stopped and made another attempt up. So that identifies this area to be a strong sort of support area. So if you was looking for a support area, you'd use this area here, and if you're looking for a resistance area, you'd use this area here. So that's how you identify support and resistance. If I'm going too fast, let me know. And if anyone's stuck anywhere, I can just explain it a bit better. Is everyone following me?
Yes.
Yeah? So yeah, that's how you identify support and resistance. But at these areas here, support and resistance, these are the areas where you want to be looking for candlestick patterns, because obviously a candlestick pattern is a reversal candlestick pattern. It tells a lot in the word. It's a reversal candlestick pattern, so it has to be reversing a trend. A lot of people, they may see a reversal pattern in the middle of a trend. It's not going to work because it's in the middle of a trend. It has to be at the end of a trend. That's why it's called a reversal candlestick pattern. So that's why it's always good to identify support and resistance, and you'll know where to look out for the candlestick patterns. Seeing a candlestick pattern in the middle of a trend like here, it's not going to really have much use because it's not reversing nothing. So it's always good to identify support and resistance areas, and within them areas there is where you want to find your reversal candlestick patterns. So that's why it's always important to understand what support and resistance are, because they're the key areas where you want to look for reversal patterns.
What time frame would you use for the support and resistance?
Again, it depends on what sort of trader you want to be, but I always believe in the higher the time frame, the stronger the support and resistance, because obviously it's got more power. But obviously you can, like I said, every information I'm telling you right now, you can use it on all sorts of time frames, but the lower the time frame, the less effective they are. So less effective the candlestick patterns will be, and the less effective the support and resistance will be, because the lower areas, there's still a lot of volatility, but the higher the time frame, the more stronger it is. So I always recommend, for me, like I said, I do a lot of my research and my work on the daily. Daily is where I kind of like play with, because it's the end of the day, and if I'm trading something, at the end of the day, at least I know it's confirmed, it's closed. But if I'm looking at it on maybe the 15 minutes, that means it's still got the whole day before it can actually give a strong confirmation. There's plenty of times you can see a day trade really, really high, and you're thinking, yeah, it's going up, but then come the end of the day, it ends at the bottom. So I always just believe in working with daily, but like I said, you can use this information across every single time frame. But the higher the time frame, the more confirmation is in terms of like identifying support resistance and candlestick patterns.